So looking at what happened on Friday, on the daily time frame, is that pardon me, there's this imbalance. We've just broken this order block. You've just broken this order block too, so there might be potential for market structure change. But if maybe we hit this order block and bounce off it, but if this order block is invalidated, I'm not going to be trading because now I'm not really sure what the bias is. But then I was expecting this gap to be rebalanced. It didn't come to fruition, and these previous daily highs should also be targeted going forward. But let's see what happens next week. That being said, let's see what happened yesterday. This is the Nasdaq. So imbalance retraded to imbalances retraded to no imbalance of the hourly. There's a lot of buy side inefficiency here. So what would have been the bias? Well, considering the order blocks have been broken, someone might have been trading with a market structure change in mind, which means they'd be aiming for sell side. Now, what would have made me do that was there was this relative equivalence yesterday. Just a recap. Relative global. Oh, buy some liquidity before 8:30. But yeah, these two look like Andrew's relative equal highs just before 8:30. Looks like they're on both sides. Now these ones are major drawn sales and liquidity. And let me check the news. See, there was no news on the USD till like 540. Medium impact anyway. It already never even came out, so it wouldn't have been a bit of difference. So at 8:30, well, what happened? We have these imbalances, right? They were rebalanced. The relative equal highs were not broken. But what was the target? These relative equal lows. But since my main objective is to see the partial liquidity taken before the morning and aim for sell side, I wouldn't have taken a trade because I haven't seen my setup come to fruition. We could look at the S&P and see if it happened. It didn't. And at the same time, the relative equal lows on the S&P, well, you can check the Dow because the three markets move in tandem. Neither, in fact, it was really bearish. So that would have been my signal. Looking at both markets and seeing that none of them broke above buy side liquidity, I mean the bias was that strong. So dropped out into a 5-minute time frame, but then again I wasn't trading because I haven't seen my objective being reached. Then again there's this buy side liquidity right here, these relative equal highs. Well, we can see them being taken out at 9:30. So sorry that we can see them being taken out. This might have been an indication. You can see this swing low being broken at 9:50. We can see that imbalance, and you know what we'd be aiming for, these relative equal lows, right? Just draw that out in time. So with that, that's the first imbalance. I mean fair value gap. This would have been the second. Especially when it just comes and leaves that point, rallies up again, it's almost certain that it's gonna be taken out, and it did. But these fair value gaps really don't seem that inclusive. So let's just drop down, see like if we can get a better entry. Can we get a better entry? Well, this swing not broken, fair value gap. So this would have been the first trade. Short position. Well, your risk would have been either that candle or this one if you're really scared of getting stopped out and your risk parameters allow for it. Well, what would have been your target? 122. That's a 1 to 1 risk reward ratio. Pay the trader. 1 to 1.5. And the next entry would have been right here, although this one isn't as big. A short position, I like to put my risk above that, aiming for what? That target. A 1 to 1.2 risk to reward ratio, not bad. Then if I took those positions, by 12 I'd be out. Well, if you had placed a third trade on time, it just come back to where you originally left it. There's also a micro scalp here. So that would have been another trade. And then I was looking for the buy programs at 3. They did come to fruition, and there was already this stop hand. And there's buy sell liquidity to be in for right here. But I didn't really see a setup on the buy programs at 3. The fair value gap never got retraced into. Unless you check the 1 minute. If you use the 1 minute, then maybe this would have been your entry, aiming for this buy sell liquidity. But then again, I don't really see relative equal highs. Plus, I already took the morning trades. That being said, this was a setup. Swing high broken, sell side been taken right here, and also previously there's this major stop hunt at during noon, and rallying all the way till 4. Buy programs are usually initiated at 3. Well, if you let it run till 4, you just probably end up the same place. So the target would have been this draw and buy sell liquidity. So I guess once that was hit, just take a trade and go home. If you don't like that risk parameter, you can just put the stop loss at the candle previously before the fair value gap. And that concludes that for the week. Let's see what happens next week. And in the dollar index, see, we took that liquidity. We have some retracement to the order block, a little bit invalidated, but there's this one also. There's also this gap. There's a possibility of retracing back into that and rebalancing it. So let's see what happens next week.